Let's start a bit of recording. All right, so we see a chart, something like this. We have two uncertainties in a row. We have a doji, two dojis in a row. And then we see a bunch of lower lows and also pretty much still lower highs. So the main question here is, how can you define uncertainty based on, one, either your monkey mind telling you, or two, your intuition or your instinct? So let's define uncertainty. What does uncertainty mean to you? Let's start from you, Manny. What does uncertainty mean to you? So I'm going to ask one per person. So I'll start from Manny, from the bottom end all the way up. So Manny, what does the word uncertainty mean to you? So you see this currently, this doji. You're not too sure whether if you're going to hold your position, buy or sell your position, or not trade at all. So what does uncertainty mean? Let's talk about uncertainty. Can you guys hear me? Hello? Hello?
We can hear you.
Okay, cool. Alrighty.
Yeah, we hear you.
Then we'll start from Anthony, since the first person said it. So Anthony, what does uncertainty mean to you?
Uncertainty in the context of trading is it's it can be a thing that I guess gets you to a point of indecision when you're approaching the market.
Indecision, good, alrighty. Jason, what does uncertainty mean to you?
It's just a derivative of fear. It's the fear of the unknown.
Okay, fear of the unknown. Great. John?
Pretty much what everybody's been saying, except it can be based on lack of confidence, whether it's you don't have the proper analysis to support a decision, or you lack the ability to make a knowledgeable decision. So that could lead to lack of confidence and fear.
Okay, great. Stefan, what does uncertainty mean to you? Sorry, Stefan. I can't hear you, Stefan. Sorry. Yep, that's much better. Yep. Probability. Is that right? The probability. Sorry, Stefan. That's all I heard. Probability. If you could type it for me, please, Stefan, that would be great. And what does uncertainty mean to you?
Uncertainty means to me is that it doesn't meet any certain conditions according to my trading plan anymore.
Okay, according to trading plan, great, nice. Subramani or Mani, what does it mean to you? Yeah, we don't know where to head towards observe that. Perhaps market or people waiting for the next play of the news to make the future decision. Alrighty, great. Okay, awesome. All right, so Let's see what it means. Uncertainty, according to dictionary.com, the state of being uncertain, doubt, hesitancy, or an instance of uncertainty or doubt. Unpredictability, indeterminacy, indefiniteness, hesitation, irresolution, decision. So great. So everything pretty much what we or you stated is pretty much defined. Okay, then the next question is, when you get to a state of uncertainty, how would you know whether if your head is telling you or if your intuition is telling you part of the feeling? So you get to this scenario. You might have the certainty, but somewhere based on your consciousness, there is that little bit of self-doubt that will lead you to uncertainty or leading you to the feeling part. So how can you determine whether your head is talking or your feeling or your intuition is telling you? So how would you know? How can you define?
That goes back to class, what we were talking about earlier, where intuition is like in the body. It's kind of like an overwhelming feeling that you kind of know what to do. It's just a matter of acting on it, and then everything else is just in the mind. It's not the same feeling as intuition is. Intuition is very different than what's in the mind.
Okay. So when the mind is talking to you, what is it saying? That? How can we define that?
It depends on how the mind's been trained, how you've trained the mind based on your affirmations and whatever other training you've done with your psychology. But a lot of times the mind can be self-sabotaging, and so you have to be careful of that. And I think the key word is, or key words is, to be self-aware, because self-awareness is is how you identify the difference between intuition and fear, greed, anxiety, all those other things that people mistake as the right answer, but really is not.
Cool. Part of the self-awareness. Self-sabotage. When that pretty much you're right in terms of the feeling part of the unconscious, which relates, could be into a limiting belief that you may have. Okay. Or they're pretty much all connected. Okay, so everything is all connected, whether we like it or not. Alrighty. Awesome. Anything else do you guys want to share aside from Jason's input? Do you guys all agree? There's anything you guys want to share on top of that, or want to add on top of that? Okay, John also basically stated state of mind, which is all your self-awareness. Okay. Because the reason why I'm saying this is people always ask me, what do you think? At the end of the day, will it really affect you what I think?
No.
No, absolutely not. So can you trade the same way, the way how I trade?
No.
Absolutely not. Right? Because now if, say for example, I'm telling you to hold your position because it may go further. Now, what if it didn't go the way how I want it to go? What emotions are you currently be feeling?
Blame.
Yeah, blame, victim mentality, right? Now, but however, if you have your own choice or decision that you're going to make part of that, then you're taking full responsibility. Now, part of that of self-awareness is, this is now the key responsibility. Part of your self-awareness, you're making proper choices, not decisions, because you're making a choice. This is whether you're gonna hold your position or close your position, close some or not close some. So when you get into this state in terms of like you're part of the uncertainty aspect, what I tend to do is that remember about the 3 rule. Either I will sell 1/3 or sell 2/3. Okay, or last part is you close the position. Now, if you close the position, then closing with taking the responsibility part of that, making a choice to take the responsibilities are pretty much they're all connected as well. What type of emotion will eliminate?
Fear.
Keep going. So if you choose to close all of your positions and you take full responsibility before you press the trigger, because that's what you choose, that's what your choice is by closing your position because you made the choice. Because you're aware that you're not too sure whether it's going to go up or go down, and you'll take your profit, whether it'll be 10 pips, 5 pips, or even 1 pip, because you're unsure, because it's uncertain. You don't know where the price is going to go, and you choose to close. What type of emotion will eliminate? The emotion of what? Anxiety.
Of being anxious.
What else? We'll do round table. Anthony, what do you think?
I think, yeah, there's an anxiety aspect of it, and I mean, to me, like, if there's uncertainty, then it's just about kind of managing your risk and thinking about what I suppose the trade is worth to you.
Okay, cool. Alrighty. Harry?
Just repeat that question if you repeat that one.
Okay, so you see this scenario. This scenario, you bought it over here, you bought it over there, the risk is small. Your forecast, the price is going to go to 104, 105, and you see this 2 in a row. You don't know whether the price is going to go up or it's going to come back down. Now you have a choice. Either you sell 1/3, you close 2/3. Now if you choose to close everything,
Yep.
and you choose to close everything and you take full responsibility, then what type of emotion are you trying to eliminate?
Regret?
Bingo! Good job. Nice. Sorry, does it make sense? Okay, regret, the if, the shoulds, the coulds, the woulds, right? Because just imagine you close your position without actually being self-aware. This is what happens to humans, what happens to us as traders, that if we don't take for responsibility or not aware, and you just close the position because you're being impulsive, right? Impulsion is when you're not thinking, correct? Based on anxiety, based on fear, and you get impulsive. What happened, John? What's funny, John? All right. So, you're being impulsive, part of your anxiety, right? And then you don't take full responsibility part of that. This is where the biggest emotion, regret, happens. Okay. Now, if you choose to close everything because you said to yourself, well, I'm going to close my position, so regardless of what the future may bring, to the upside, to the downside, I'm sweet. Then there's no regret. Okay, does that make sense to everyone?
Yes.
Okay.
Yes, correct.
Yes.
Now, the other scenario is that, if you sell 2/3 or 1/3, depending on the stop. Now, if you're selling 1/3 and your stop, it's say the low of this, 102.22, and you only took a profit pretty much, that's 102.22, say for argument's sake, this is the closing price, 102.84.22, make that 82.60 pips. 60 pips, and say for argument's sake you close at 103. 102.82, 103, that's 18 pips. 18 pips for the 1/3. 2/3, 60 pips. Is it a good deal or is it a bad deal?
It's good.
It's still a good deal.
No, it's not. Because if 1/3, right, you only made 16 pips. No, 2/3, you still have 2/3 remaining. Now, if it drops, it's down, you're down 60 pips times 2, 120. And you only made 16, so it's not a good deal. You limited the risk. Definitely, it's still better than pretty much waiting for it. However, now it's a double-edged sword. If it goes up another 50 pips, then you made 100 plus 16 or 18, right? Then you are up 118 pips. But it's the risk that we have to take once again. Okay, now, but if you're going to close 2/3 of 18 times 2, 36 pips, but it's still in terms of where the closing price is, then 36, 60, then at least if it drops, then you're pretty much 36 minus 60, 24. 24 pips, I mean, the risk is still limited, not bad. However, if you increase your stop to the low of that, because you already made 36 pips, and if it goes to 102.63 from the point of inception, 20 pips, then you're up. So risk management is actually very important. So you have to calculate doing certain things that, great, if I'm going to sell 2/3, then I already made 36 pips, then I'm going to put the stop not over here, but somewhere around here, that just in case it chooses to drop, because now the uncertainty of sales starts to push the price to the downside, then you are pretty much still in the green. Does that make sense to everyone?
Yes.
Okay, but if you
Yes.
close everything, then definitely
Yes.
you're a winner part of the uncertainty part. But if it goes 50 pips, then don't come up to me or to anybody and say, oh man, if only I did this, did that, blah, 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 blah. So at the end of the day, I couldn't care less, because you're just currently now trying to get some form of significance or the type of sympathy. I'm the type of person who don't really give that much unless you're in pain. But at the end of the day, if you don't take full awareness or full choice part of that, then so be it. Then tough luck. pretty much, right? Okay, and this is where we are at the moment. Okay, so yeah, in terms of the uncertainty aspect of things when it comes to two dojis and things like that, the most important part, if you're self-aware, what are the strategies that you can implement within your trading? I always, like I said, like with the class today, the magic 3 is always important, and also knowing the intuitive part, and also is it really in the instinct or the intuition? Actually, there's a difference between instinct and intuition. Knowing, like using your instincts and knowing your intuition. What is the difference between the two? Does anyone know? How can you distinguish instinct and intuition? According to Mr. De La Hoya, one of the great boxers in the world, champions use their skill and their instincts. Good traders use also the instincts, aside from their intuition. Great. Intuition is based on experience. What is an instinct, though? What is an instinct? Okay, Manny says, moment of thinking, one will happen instead of other.
Instinct for me is something inbuilt.
Something inbuilt. Okay, great. What else? Harry, Jason, Johns, Anthony, what do you guys think?
Well, I know it has something to do with your senses. I think it's like it's an emotional response to your senses.
That's instinct. Cool.
Yeah, I mean, it does have something to do with being able to sense your surroundings.
Nice. Awesome. What else?
Things are natural behavior to observe in a certain way.
Natural behavior. Cool. See, there we go. We're getting to something.
Yeah, that would be instinct for me. Intuition is what we identified earlier,
Yes.
where it's kind of like a gut feeling or like a heartfelt feeling.
Mhm.
That's intuition, and then what Harry said about instinct as well.
Excellent.
That would be the two differences.
So what's a great example of a person using an instinct? Using their instincts.
We'll go back to the hunter-gatherer era and look at how people used to hunt and gather food and stuff. Instinct is, knowing what vegetation to pick and what animals to hunt in order to provide. Intuition is just kind of using the body to help you sense something that is correct or not correct.
Cool. Anything else? Good, nice example, Jason. What else? Anything else in terms of examples for instincts compared to intuition? All right, I got one. Now, this is easy for me to say because now I got two kids. Like babies, for example, it's amazing how they use their instincts. They automatically know where the breast is, right, from the very beginning. From pretty much day one, for the moment they come out, they use their instinct in order to survive, right? Okay, how can we then relate this when it comes to trading? How do you know when you're trading based on instinct and also part of your intuition? Because intuition is based on experience as well, based on skill. So how can you now use your instincts when it comes to trading? And instinct is an inborn pattern of activity of tendency to action common to given biological species, and not a natural thing, impulse, inclination, tendency, natural intuitive power.
Like knowing when to get out of a trade.
Oh, so how are you supposed to know when you get out of the trade? Okay, great. Here's a great example. How do you know to get out of the trade part of an M3? When can it supersede the actual ruling of a methodology? Doesn't matter be M1, M2, or an M3, or any type of trading system.
No, it's just when you see obvious signs.
And hence now, how can you then identify, rather than using your head, but using your feeling side, the intuitive side, or the instinctive side?
Like if you know price is exhausted and it's time to get out, then it's time to get out.
Okay, so what causes us then not to get out?
Greed.
Okay, let's go through certain things. Greed, what else?
Fear of missing out.
Got greed, fear of missing out, what else?
Your beliefs. Maybe you're more correct than the chart.
Okay, beliefs. Here's a good one. Righteousness, and now you're hoping they can still pretty much go the way you like it to go. Right, so many say some key pivots were taken out, perhaps at a good sign to get out. See, even there's some good signs to get out, people will still won't get out. Right, because we're dealing here now with the internal factors of the psyche, where some of the mind's too powerful, rather than taking actual action rather than being objective. And the subjectivity comes from the 6 inches between our ears. So how many times have we done that? We have a good system. Systems are telling us to help out, but we still don't get out because of these certain factors right here. Greed, fear of missing out, beliefs, the hoping part, the righteousness part, the ego part, right? So how can we be in check with all these once again?
Just by
You must know your
being
purpose,
objective.
why you're trading.
Okay, and says know your purpose. What was that, Jason, please?
I was just saying being objective.
You need to have a well-defined plan.
Be objective. Have a well-defined plan. Anything else? And it comes down to the self-awareness is so important. It will pop out every time, anytime, right? So if I always ask this question all the time. If you can answer that within that moment, who am I being? That will eliminate everything. Because if you can answer that, then it's an easy, pretty much thing to do. Now, if you're saying and you're still pretty much being right, then I think it's time for you to change certain things, the way how you're trading, or maybe perhaps trading won't be for you. It's so easy, right? When I'm saying you, I'm just pretty much in general. And the reason for it is because 75% out of 100, 75% of traders who lose consistently, even though they have a good trading system, is because of these internal factors. Why? Because they're not conscious about it. Now, you guys have an advantage. You guys have, especially the private guys, part of the consciousness is for you having that first as part of the level of awareness, even before you learn how to trade a methodology. So part of the consciousness, if you are not self-aware, so in other words, the subconscious and the conscious. The subconscious will always play a trick on us every time, each and every moment, every millisecond. That's how smart the design of our machines work. Like Matrix, right? That's pretty much why the movies we created, because of we are machines, but we have a lot of flaws as part of the machine, and part of our internal factors of our belief systems, value systems. It's created who we are as an individual, which creates our persona. Remember, persona comes from the Latin word a mask, personality. Hence, we have different personalities if you really think about it, being created from our experiences from the past, being brought in the moment, which we bring it as well in the future. Which we bring it is a total reflection of who we are when it comes to trading. At the end of the day, our end result when it comes to trading is just a reflection of our performance at the end of the day. Were you being meticulous? Did you have a well-defined plan? Were you being objective? Right? Did you know your purpose on why you're trading? Or were you trading based on this? Or you're trading on the positive emotion side of things? Pretty cool. Any questions? So that is my topic for today. I hope you got something out of that for pretty much 38 minutes that we've been together. And if you can, hopefully you took some notes and you can do that. That will increase your probability of winning in trading. Okay, my topic is over. What else do you want to talk about today? What do you want to go through?
I believe Harry has got a topic. I think he wants to know how to enter a trade. That's his one of his issues at the moment. So maybe we can go through that.
Maybe perhaps if Harry will tell me though, greatly appreciate it, man. But it's really up to Harry on what he really wants to talk. So unless Harry, what is the actual topic that you want to share? Net salary is the critical to achieve success in trading. Cool.
Yeah, let me just fire it up.
Okay, whilst Harry is doing that, the other thing from the so there was an issue on my end with the pound against the yen. So see how we were on this scenario with 1700. It was a 2 o'clock our time. And
I think your screen changed.
oh, sorry. Okay, here we go.
Right.
So this is where we were. 1700 hours Eastern Standard Time, which is 2 o'clock Pacific Standard Time. And as part of my plan is that approximately about that 152 was a good mechanical order after 1, 2, 3, 4, 5 hours. The high of that is 151.96. 4 pips away from the point of entry. So if you guys entered at this price, well done. That is now part of my strategy in terms of trading, is that when something is just in a level of demand, see as part of a level of demand. Can the price rebound to get a better price to go through there? Now, since we have a lower low, still lower high, have a doji, stabilization of level demand, yeah, you can get it within the closing price as well. But as a supply-demand trader based on M1, to buy the level demand is not a good idea. Okay, since in an uptrend, in an uptrending marketplace, to buy demand, you will lose. So, where within the shorter time frame, see how it was hovering around. It is a downtrend, but lower lows, a lot of lower highs. Even on that one right here, high 152.19.8, 152.19.3. So we have a higher high from here, but that high didn't want to go beyond that. So the high 152.149. So in other words, it's still pretty much a lower low, lower high on a level supply there too. This high didn't want to go and break through those 1, 2, 3. Hence, this is where we're at today at the moment. Now, on a bigger time frame, probability that it can continue to drop is highly probable as well if it chooses to. Now, the reason why it doesn't want to go up, in my perspective, is because of that high didn't want to go and surpass that high. Can they retest the level of supply? Absolutely. They can retest it once again. Now on the third try, if it doesn't want to, then it will be more stronger. That the next time that it's going to fail is highly much stronger and more probability can drop. So that's how supply and demand actually work. Okay, Harry, you ready?
Ready to go.
Okie dokie.
All right, this is a pound-dollar trade from last week. So it's a nice, this is a daily chart, so it's a nice level of demand. This was the last completed candle for that particular day. Overall downtrend, short-term uptrend, nice level of demand around the 152. Didn't fail to take out that last low from the previous day. So nice stabilization, nice base. So I made a decision to go in at this trade. To fast track it, I went to the 1 hour. So just highlight it for you. So I saw it about this point there. So that was about, I think it was at 9 a.m. just after the morning live session. So it was making higher highs, higher lows. The bulls started to take control. Obviously, it's a nice sort of uptrend here. It failed to take out that high in that period, or this one, but it was making higher lows nevertheless. So I had a Fibonacci level retracement to get in around the 152.60, I think it was, between these 2 points. So I set the limit entries to get in, and obviously, went to work, and et cetera, et cetera. And then the next hour, I did this and that. So at this point, I'm sort of wondering, all right, I didn't retrace to a particular level to get in. And then I thought, what point am I chasing the price, and what point do I just get in because the bulls are very, very strong? Well, I believe from memory there was a news announcement that just came out or was about to come out, so they could have been positioning themselves for that report. I'm not too sure what the case was actual. So 53.25, sellers came in at this point. And then it stabilised once again just before the UK session around 53.11. Didn't even want to retrace being back then, around the 53. So does that work during this period of time? So at what point do you chase the market to get in? Obviously that was that news announcement. So I'll just go like that for a moment. So at what point do you actually move your Fibonacci from the morning level to probably the day or to the UK session to actually get in? I mean, that news announcement was the next hour, so that's all very well in hindsight now what it actually did. But at that point, that could have been, I don't know, buying the rumour and then selling the fact. So it could very well come back down to these levels based on that news report. It's just that it came out to that point. So I guess my question is, if you miss the entry like in a morning session and it runs away from you, where do you actually get in? Do you chase that point? Do you just reassess your Fibonacci's on the hour every hour? Do you come back at the UK session? I'm just looking for a little bit more guidance on when to actually hop in.
Okie dokie, before I will answer, any takers, like in terms of what strategy can you implement when things like that can happen? So would you mind putting a demand supply line for me for a second, please? And when you pretty much wanted to enter.
I actually had my limit entry around there. That was one. I had one around there, and I had one around there.
Yeah.
That was set from the morning.
Okay. Would you mind then? Let's go through your step-by-step process here. Can you maximize that chart and then scroll it to the left where it didn't exist as yet? So just imagine on where you saw him that morning.
Is that okay? The magnifier?
Nope. Keep going. Yeah. That's it. That's perfect, right?
Oh, sorry. Yeah.
Alrighty. Let's go through this. This is a good exercise. I'm going to start pretty much with everybody in the room. Before even that went out to go to the upside, let's hit back one more. That's two. Okay, there you go. What is the current trend based on what we can see, based on a 1 hour chart?
So is this an open question or just for me? Or?
Oh, it's an open question for everyone.
Okay.
So we're going to make this a good exercise for everybody.
Consolidating.
Consolidating. Okay, I need a little bit more. Consolidating in...
Lower highs and higher lows.
Lower
there is no
highs.
definitive trend.
Lower highs, higher lows. Alrighty. Who agrees to that? Lower highs, higher lows.
Lower highs, higher lows.
We need to be objective
I
as much as we
I
can.
agree with that.
Okay, John says, Subramani says that's 2.
Yeah, I agree.
Okay, 4. Anthony, 5. Stefan, great. All right, great. Now we got the lower highs, higher lows. Now it's approaching the level of supply. Do we all agree? For those who are not familiar,
I agree.
supply is merely basically reaching a resistance area. Okay.
I agree.
All right. Now it's reaching in a supply area, but do we still agree that even though it's a bunch of lower highs, higher lows, that it's also in a downtrend?
Agree.
Overall, yes.
Absolutely. Okay. Now here is now where it's a dangerous point. Now you can see through there we're reaching a level of supply. You can buy a level of supply on the downtrend. Now, if you didn't know that there's going to be a report and you're buying through there, I'm sorry, that you're selling, because if you're now selling at a good level of supply and say you're short, which your risk is so small, and it goes against it, then at least you'll be taking out with a small risk, a small stop loss. But if you are buying at a level of supply, and if the report wasn't that good, if the GDP wasn't a negative, where do you think the price is going to be? To the upside or to the downside?
Down for sure.
Yeah,
For sure. Yeah, it could even tank all the way to 152 probably, right? Okay, let's create now a scenario. You know that it's on a level of supply. What strategies or what can we implement as part of our strategy?
Can hedge the position.
Okay, one's hedging. What else?
It could be, if you go short, close it double long.
Cool. Close it. along it. What else?
By 1/3 just for a test.
Excellent. By 1/3. Test the waters. What else? Come on, guys, think outside the box. So you have multiple strategies you can already implement. So by 1/3, short and double long. What else? Excellent. So there you go. That's the last one. If the market breaks the resistance or level of supply, then you go long. Now go through, and at the same the moment right here, who is currently in control at the moment? Bulls or the bears?
Bulls. Totally.
Now they're gonna retest. How many times now they're retesting the supply level?
20 or 6, 7,
3.
8.
1, 2, 3, 4, 5, 6, 7. Currently it's the 8th one. From the first one right there, actually even to where the high where you put the line is, right? Good, is currently in the 8th. All right, now scroll 1. Bingo. See how, do we have a clear cut that the supply level has been broken?
Smash.
Yes.
Who's currently in control?
Yep.
Bulls.
Bulls.
Buyers.
Buyers are in control, and that's pretty much your sign right there that people know what's about to happen even before the news is going to be. So now they're anticipating, they're speculating that there might be a good report prior to the news. Remember, institutions already have probably the report before it will go to the public. Okay, so scroll, keep going, scroll for me, please. Okay, I'm going to take another 2 more minutes, and then I want to go to the next class. I want to set up for the next, actually, because there's a report coming at 11 o'clock. All right, here we go. So 1, 2, 3, right? And then out of nowhere, we have a red bar. We have a dark cloud cover, meaning that the closing price is way below halfway of the body. So there's a form of a change of scenario, probably a correction. This is now where you can put in. Look at the highs. Did the high of the red bar finish higher compared to the previous high?
No.
No, it didn't, right? So we have a higher high, then we have a lower high. Then that is pretty much your change of the pivot, the pivoting. So we have a higher high. If there's a higher high, what is the next part of the move?
Higher low.
Higher low. Then it is where you can put now your fibs from the last low to the last high to create where the correction is going to be. So you have there 153.05, 153.96, 152.88. Keep going, please. Did we make it up that the price went over 52.88? No. You know, it was already the psyche or the psychology of the mass as well. I believe, we're going to crack itself part of the news, and out of nowhere, bingo, boom. So in other words, they gave you, this is where the markets, they're pretty much, the markets is like God. They give you second opportunities, third opportunities. And if you didn't take that, then at the end of the day, the regret will occur. Okay. So as part of that, you just buy 1/3. Bigger time frame is already giving you some signs. Buy just a little bit. Test the waters. And then you go on the correction part. There it is. You can set your limit orders to buy. Now, if you went on that area, and within pretty much, 1 hour, you made 100 pips. So to make 100 pips in an hour, that's an awesome, they come once in a while, right? So you see, I hope I answered your question, Harry.
Yeah, I know what it is.
Gotcha. So method number 1 is the most simple, methodology, but there's a lot of factors involved, in creativity. Thinking outside the box is also a very important part of that. Okay. Awesome. Alright guys, hope you enjoyed tonight's lesson. If you're going to be in the next class, great, but if not, I'll see you next time. But I know this report based on the Euro and I need to get set up. Alright guys, adios. Ciao. Bye.